Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, Russia's invasion of Ukraine deepens, as does the resistance. Elsewhere, US jobless claims rose last week to 218,000 claiming these benefits. That was marginally above what was expected, even if they are back to pre-pandemic levels. There are now just 1.9 million people on these jobless benefits and still close to a 40-year low. Going the other way, American consumer inflation is at a 40-year high. In February, the headline rate rose to 7.9%, which was what analysts were expecting. Core inflation, that's without food or energy, was up to 6.4%, also as expected, but showing how embedded inflation has become in the US. Despite all this, the flow-through from the Ukraine war came after this data released. March data will be shocking, no doubt. Equity markets fell on this data, which was a bit surprising given it was expected. The ECB announcement might have also contributed. But all this cements in a substantial Fed response next week, which markets assume they won't like. Meanwhile, in Japan, producer prices rose 9.3% year on year through to February 2022, the highest rise there in nearly 40 years. China's economy might be out of the doldrums, but that is not because they aren't shoveling in more bank debt. In fact, new yuan loans rose at an astonishing rate in January, almost $4 trillion in January alone, and well higher than what was expected. That is an all-time record and 3 times the December rise. It's a pity for them that it isn't having more of an effect on economic activity. Or perhaps it is, helping them just tread water. You wouldn't think they could just keep doing this, however, just to stop going backwards. Beijing is in meeting mode at present, so bravado is high, but they seem to be in some trouble economically. And South Korea has a new president, a conservative one, who says it will be less conciliatory to China and North Korea, and presumably to Japan, with whom South Korea has many grievances. At an overnight ECB policy review, they surprised by speeding up their asset purchase reduction schedule for the coming months and signalling they could end it in the third quarter of 2022 if the medium-term inflation outlook doesn't weaken. More monthly net purchases will now scale back to $20 billion in June, a sharpish and unexpected pace. Equity markets dived on this news. And the Ukraine war is making shipping costs more expensive, especially for bulk cargoes. But although it remains unusually expensive, at least the wheat price is off its highs. A pullback from unusually highs for rice, soybean and corn is underway too, even if it is small at this stage. The implications of these high grain prices on animal feed costs for non-pasture farmers is extreme. And the US Treasury 10-year yield opens today at 2.01%, another 9 basis points rise from this time yesterday. It last touched 2% in July 2019 on the way down. And the price of gold starts today at $1,997 an ounce and down $4 from this time yesterday. And oil prices are sharply lower again today, down by $7.50 a barrel. In the US, they're now just under $106.50 a barrel. The international Brent price is just under $110.50 a barrel. And the Kiwi dollar will open today a little firmer at just on 68.6 US cents. Against the Australian dollar, we're at 93.4 Australian cents, which is slightly lower. But against the euro, we're half a cent higher at 62.3 euro cents. That all means our trade-weighted index starts today at just on 73.7 and 40 basis points higher than this time yesterday. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.